going crazy and traveling. I heard the airports are full again.
Airports are packed and people, I mean, I don't know if it's like responsible or irresponsible, but I think people are really feeling every moment is so important. And I think people just need to like get out. So.
Well, welcome everybody. Good evening and good morning to those in Europe or US. We're back again with Hatch Global. We have an exciting guest, so I'm going to speak about in a minute. But just to give a background, to Hatch is a place for innovation, growth, collaboration. It's a center of gravity for all things startup. Hatch is the home for hungry entrepreneurs in Asia. And the vision of Hatch is to basically transform the business culture by looking at genuine opportunities for entrepreneurs. We build space that encourages entrepreneurs to incubate, collaborate, and accelerate. And we have 2 spaces. One's already up and running, a second one in Sri Lanka, and we're just working on one in Pakistan, which will be open before the end of the year. The other partners on this chat is BYRC Ventures. It was created by a passionate entrepreneur and friend, Ejaz. He kickstarted with big ideas that really supports with technical support that he gives as well. And they also provide a set of acceleration support, including a plug and play commercial space to work from, customized business training, as well as professional support such as legal, accounting, and corporate governance. The third partner is Seed Ventures in Pakistan, a social entrepreneurship and equity development organization. It supports and promotes entrepreneurship across various landscapes and verticals, working extensively with micro enterprises, small and medium enterprises, startups, universities, and school children. And finally, Pro Pakistani is Pakistan's largest independent publisher of tech, business, and other news, with over 136 million traffic to its sites. We've been away for a few months. We just felt we'd start this again and have another run of some of the best speakers that we have access to. And today we have Jenny Fielding. She's the managing director of TechStars New York, where she invests in tech-enabled companies and leads the program. Jenny is also the founder and managing partner of the fund, and we'll talk about a little bit about that today. A unique founder community investing in and supporting entrepreneurs around the world. She was the first check into more than 130 startups. If you look at her angel profile, you'll see all the companies she's invested in, including unicorns. And she just, one of her latest startups actually went on a listing recently. Previously, Jenny also headed up innovation at BBC Worldwide, where she made BBC Labs and also strategic investments and led business development for them. She has also started several tech companies, most notably Switch Mobile, a mobile VoIP company that was acquired in 2009. But she began her career as a lawyer, spent time at JP Morgan, and also is a graduate of Columbia University, where she's also a professor. But most importantly for me, she's a great friend and a classmate of mine, and I'm happy to have her on the Global Show with Hatch today. So welcome, Jenny, to South Asia. You promised to come and visit us soon, so we're waiting for you to come over.
I can't wait, and thanks so much for having me. It's a real honor to be here and to be part of your burgeoning community that you've created. It's really awesome.
Thank you. So Jenny, one of the things that I really wanted to ask is how does a lawyer become an entrepreneur and then get into accelerators and becomes a fund manager? How does that really happen? Can you give us a little bit about how that actually happened with you?
Yeah, so like many things in my career, I was kind of an accidental entrepreneur and then an accidental investor. So started off much more traditional. So went to law school and ended up, at a big bank, actually doing investment banking. But like many people that are probably watching this, I'm kind of the traditional empath founder, meaning that I saw a problem in the world that was impacting me and I just couldn't sleep until it was solved. And so at the time, that problem, not very like deep problem, but it was very difficult in the late 2000s to make international calls. And so if I wanted to call you, Nathan, on my mobile phone, it would actually be quite expensive. And so at the time, I had a boyfriend who was living in Germany, and my phone bills were kind of, through the roof. And I just thought to myself, wow, there's got to be a better way to do this. And so I had a, pretty fancy job at JP Morgan and didn't know anything about technology. I don't even think I heard of what venture capital really was. I'm not even sure that was an asset class back then. But nights and weekends, I just started thinking about this idea, and probably like many people watching or listening, I just started kind of hacking on it myself and ended up kind of teaming up with a team and launching a startup. And I stayed at the bank until we'd launched it, and I felt like a little bit more secure. So like people, everyone says, oh, you need to go full time immediately. I think that can be hard for many people. So I kind of eased into it. And ended up, leaving and running a startup. So that was the first foray into entrepreneurship, but very traditional background before that.
And excitingly, your startup got you exited it. So how was that feeling when you exited your startup?
Yeah. So I will say that running a startup was the hardest thing I'd ever done in my life. The highs every day coupled with the lows every day was very emotional, right? You just have these incredible moments of, things going great, and, you think you've turned a corner, coupled with just everything is falling apart, and you're putting out fires. And so I think normally that happens if you're at a company, maybe over the span of a few months or years, but at a startup that can all happen in one day. And so there was a lot of emotional roller coaster. And I think I made a lot of mistakes, and those mistakes kind of led me to realize that I needed partners and I needed people to kind of help me on this journey, and ended up kind of teaming up with a company that had a strategic vision, very aligned to what we were doing, except at a larger scale. And ended up, being acquired at that company and spending a few years with them, really on the integration side. So it was incredible for your first company. It was also a little heartbreaking for your baby. So a lot of emotion tied up to it, and a lot of learnings.
And how much of that learning really sort of molded what you did in the future, the accelerators that you built, the fund, and also working in so many different countries? How was that a founding stone for you?
Yeah, well, one thing that's interesting to note is that my co-founders of my startup were actually Danish, and we had an office in Denmark, and much of our tech team there. And I think it really opened my eyes. At the time, Scandinavians were pretty ahead in mobile technology. And it really opened my eyes that, innovation was really everywhere. And so we were in the US actually pretty far behind in many areas. And so that I wanted to kind of expand my vision and make sure that I was developing relationships in places around the world where they were more advanced. So that kind of set me on this like global journey, really, and met founders from around the world, and ended up actually at BBC Worldwide, where I traveled the world, everywhere from China to India, to the West Coast, really figuring out different interesting pockets around kind of strategic investments, innovation that this media company could tap into. And so that was very, very exciting to me. And then kind of on the side, I started this little thing called BBC Labs, and everyone thought it was like this kind of cute little, yeah, we're going to work with some startups. And actually, it was the first corporate accelerator in Europe. We ran that for many years, and it went on for years after I left. But the thing that was so exciting to me is that even though like we were doing M&A and we were spinning out companies and we were investing in later stage rounds, the impact that we could have at the early stage with these companies by just helping out, by just surrounding them with resources, by giving them access to potential corporate partnerships was actually really monumental. And I realized that that intersection between kind of big company and small company was something that I was kind of uniquely suited to do, having kind of gone through a similar journey myself. So that's why the accelerator model really appealed to me, having, you know, kind of done all the other areas within innovation, again, M&A, later stage investments, co-creation, spinning out companies, but the accelerator really resonated with me. And so when I got a call from the founders of TechStars saying, you know, that they were getting ready to launch a new program in New York, and would I be interested, I started to kind of lean in and pay a little attention. The funny part of the story is that they offered me a job, and at first I just I wasn't sure, you know, that I kind of wanted to do this full time or that this was right. And so the way that I actually, you know, decided to join TechStars was I told them that, you know, I wasn't going to take the job as the managing director, but I would become kind of a mentor, and I would be like a lead mentor, and that I would get really involved and just get to know them. And after a few months, I was totally hooked. The methodology was incredible, and seeing these founders really flourish throughout the program really made me realize that that was what I wanted to do. So in 2014, I joined TechStars full time, and yeah, I've been there for 7 years running the New York program. Just had my 7-year anniversary last week. So
well, congratulations.
Yeah.
Those of you guys listening, please do drop in questions either through the comments box or Q&A on the web. Please, we'll be taking it up right at the end. So Jenny, a lot of the people in South Asia haven't been exposed to TechStar. I mean, they've heard about it. They've obviously had an accelerator in Bangalore for a while. I'm not sure if it's running anymore, but just in 30, 40 seconds, just what is TechStars and why is it so important to the entrepreneurial world?
Yeah. So kind of at the high level, TechStars is this incredible network that connects entrepreneurs with resources. And we do that through our accelerator programs, which are kind of 3-month boot camps where founders come from around the world to either move into our office or to connect with us virtually to this community of mentors, other alumni, corporate partners, investors, this kind of massive network of more than 20,000 people that have been assembled, all to help kind of kickstart the companies. So when I started at TechStars, there was, I think, 25 full-time employees, and I don't know, we were running 6 or 7 programs, all in the US. And now, we do have programs around the world. And we're really kind of expanding quickly throughout Europe. As you said, we have a program in India, we have one in Singapore. And so you'll see more programs around the world with TechStars. But I think the differentiator, because there's a million accelerators out there, is really the connectivity with the network. So you can go to any TechStars program and you're really looped in to this kind of global network.
What advice would you give companies that are really looking at TechStars or global program? And when is the right time for a company to sort of participate in the program? Because sometimes you're too early, sometimes you're too late. There's obviously a correct time, or is there a correct time?
Yeah, I'm not sure that there's that one kind of time. But I think as an entrepreneur, sometimes you get to a point where you're like, wow, I could go faster if I had X, Y, and Z. And sometimes that X, Y, and Z isn't just capital, right? It's access to new markets, it's access to expertise, it's people that can, help you fast track. And so, I think TechStars is a great place if you, kind of say, wow, if I wish I could get a year's worth of work done in 3 months, and what are the things that I would need to have surrounding me to make that happen? So I think that's the kind of perfect moment. Those companies tend to be quite early, kind of at the early stage, idea stage, pre-seed and seed tend to be the time to join a program. So I'd say those are the times. And then we do run some of these vertical focused programs. So for a while I was running our fintech program. And so if you were a fintech company and you wanted to build your network in New York and you wanted to connect with one of the world's largest banks and potentially get pilots and POCs off the ground, this was a great program for you to consider. So I think there can be really different reasons to join an accelerator, but it's all about, can you supercharge your business in a fraction of the time?
And what sort of criteria do you use in selecting companies? You must be having thousands of companies applying every time you have a program. And what's the criteria generally that you use to select them?
Yeah, so what's unique about TechStars is that all of our managing directors are founders themselves. They've all built and scaled companies, some successfully, some not successfully. In my case, a little bit of both. And so, we really come from a founder lens, but every, MD has something kind of slightly different that they look for. In my case, like the thing that I really focus on is that idea of founder market fit. So at the earliest stage, and I really love going early, there's not metrics to look at. Most of the companies I accept are, pre-launch. Maybe they have a prototype, but I'm really looking for a founder that has a meaningful connection to this problem, right? And so like I was, as I call it, the empath founder, like I had the personal problem that I was spending nights and weekends trying to figure out because I couldn't believe that this was, what was going on. I'm really looking for founders that are obsessed with this problem. So I'd say that's one. And then the second is like, we're really looking for founders that are not building for today, but are building for tomorrow. What I mean by that is they have a vision of the future that most people maybe don't even know or agree with or understand yet, but they have a hypothesis of like where the world is going, and they're building something that can help the world get there. And that's a really exciting proposition. So I'm really looking for founders that have a North Star and can kind of see something that probably I can't see. And then I'd say the last characteristic that's important, especially if you want to join an accelerator, is to have a learning mindset. So if you kind of are someone that's like, very stuck in your ways, and you kind of know your roadmap and you're feeling really good about it, you could be a great entrepreneur, that's for sure. But you're probably not going to thrive in a TechStars program, because in TechStars, you're going to get so much feedback from so many different people. And it's really your job to synthesize that feedback and then run your company how you want to run it. But if you are someone that is just not feeling open to feedback, you're going to find the process and the methodology quite exhausting and maybe antagonistic. So we're actually looking for people that want to learn, that want to get feedback, that want different points of view.
And I think that you're absolutely right. There are founders who want so much of feedback, and there is founders who just want to just get on with their work and they just want the money. So one of the key things that we've seen is also in accelerator programs is really access. And because of TechStars access globally, it's one of the leading programs. Can any company in Bangladesh, Pakistan, or Sri Lanka, or India really apply for any of the programs overseas? And if so, what percentages of those cohorts are overseas companies?
Yeah, well, I'll give you a pre-pandemic and a post-pandemic answer. So pre-pandemic, our programs are open to anyone. Anyone can apply. But pre-pandemic, one of the requirements for many of our accelerators were that you spend a few months in the place where the accelerator is. So we have actual physical space, and founders move in for 3 months. And so traditionally for TechStars New York, we would have probably like 1 or 2 international companies, and we would help them get visas, and we would help them kind of relocate to New York for a few months. Pandemic obviously changed all that. No one went anywhere, but I think it actually really opened us up to the possibility of, taking more international companies. So if I look at my current cohort, 4 out of 10 of the companies have founders that are based internationally. And so that was like a real shift for TechStars New York. We have a company in this cohort in Kenya, we have one in Portugal, we have, and so I think we've thought a little bit more globally. I guess, even with our kind of Zoom nature, one thing that no one has really figured out is time zones, right? And so from the US, having people that are not coming to New York but actually virtual from Asia can be pretty tough time difference. So that's something that we haven't figured out, but founders do it. We have founders that are in US based programs, and they're up in the middle of the night and everyone's trying to accommodate. So yeah, it's challenging all around, but I think that if there was one, if we could even say positive thing about the last year, is that I think we're all thinking more globally, and how interconnected we really are.
And have you had to adjust what you do physically versus being online with these the current times?
Yeah, so I was pretty nervous last summer when I ran my first virtual program. I mean, I've been running programs at TechStars for years. I'm the longest standing MD, so it's like I kind of know how to run a program, but I didn't know how to run a virtual program. So I was really nervous, and the first program actually worked out really well. There are some things that are actually easier. So scheduling with mentors, for instance, we have 200 mentors at TechStars New York. And you can imagine what our poor program managers and associates need to do to schedule those people to actually come into the office, right? And then this one's running late and this one can't make it. And so it's like a scheduling on Zoom, everyone's on time, everyone can make it. And it's actually logistically a lot easier. So there've been some things that have been better. And there are other things that are hard, right? So one of the kind of tenets around the TechStars program is really the founders kind of bonding and spending late nights in the office and eating pizza together, and really having those kind of off-program moments, and those were harder to facilitate. So I'd say some things were definitely different. Some were easier, some were harder.
And Jenny, one of the biggest things that we've seen in this part of the world is there's been a lot of corporate accelerators that have come on board. Not a lot of them have been successful, but I really like the model that you've pursued, and we're doing at Hatch as well, is that we're collaborating with corporates and building out programs for them. And I think probably I might be speaking on my belief, but I think one of the successes that you've had, especially in New York, has been the corporate program. And what you've done for the corporates as well. So if somebody was offered a place inside a corporate accelerator versus, say, applying for TechStars, what would your advice be, and how important has corporates been to the accelerator program?
Yeah, I mean, I think like everything, you have to do your diligence, and the best way to do that is talk to other founders who've gone through those programs and see what their experiences are. So, for any founder that's listening, like no matter what it is, even if it's TechStars New York and everyone's saying it's great, talk to founders who've gone through the program, get the first-hand experience of how it was. I think there's a lot of great programs out there with corporates where they really have the right mindset and they're there to kind of help and support. And then there are a lot of corporate programs where, it's more of like a check the box. Oh, we need an innovation program, so we'll do that. And the founders don't get a lot out of it. So again, every program you need to evaluate individually. We had a really great partnership with one of the large banks, and I think that we were able to unlock a lot of value for our companies through that program. And that program ran in London, and it ran in Tel Aviv and New York and South Africa. And so there was kind of this really great momentum that we built around fintech and this large bank. But there were challenges as well, right? And so, I think you just have to find the right partner. So if you're an entrepreneur, just ask the probing questions. If you're there to get a pilot or a POC, just be really upfront about it. Is this something that you can imagine working with? What would be the next steps? What are the barriers? What's the process, right? And so just try to understand that as much as possible before you join a program.
And if you were a corporate and you were thinking of a corporate accelerator program versus sort of joining with an accelerator like TechStars or Hatch or BYLC, what would your advice be? Because everybody's trying to be innovative. Our belief, having run open innovation in previous roles, is that it's very difficult to get corporates to be changing their mindset. And in a different environment, different thought, different leaders, you see a lot of change coming in pretty fast, and you've seen a lot of successes as well. So what is your experience been over the last 7 years with corporate accelerators?
I mean, Yeah, I ran a corporate innovation group previous to TechStars, right? And so I think the first learning from actually running one was like, if you're the corporate, get your house in order first, right? So everyone kind of wants to, be the shining star of, oh, we're innovative and we're ahead of everyone. But if you don't have the mechanisms internally to actually work with these startups, like it's going to lead to heartache and you're just not going to be successful, right? And so think about your procurement processes, think about your contracts, think about all of those things that you are going to ask startups to work with, and make sure that you've really got them in order, so that you're ready. So I think that you need to, when you're in your corporate and you're in the exploration phase, you need to really look internally and say, like, what are we actually able to do and not do, and spend some time working internally, getting those systems in place, so that when you do welcome startups into your ecosystem, you set them up for success. So I think that's my advice.
So I want to pick something that you're very fond of. I'm going to read out a statement you've made. Far too often, I've watched founders struggle with fundraising, pitching the wrong deal to the wrong investors at the wrong time. It's painful to watch, and even worse as a founder, and mostly avoidable with simple process for staying organized and tracking. And then you've done a lot of presentations around this, about building investor pipeline funnels. Could you just explain how you got to do that and what you've seen and how you've sort of helped companies get through this?
Yeah. So when I was a founder and I set out to raise money, I was running my business. I was super busy, and people would introduce me to investors, and I would jump on a phone or a plane and I would meet them. And I didn't really run a tight process. And as a result, my fundraising was harder, longer, and it just wasn't efficient. And so I think I started thinking about fundraising like you would a sales funnel, right? And so if you're running a sales organization and someone sends you a lead, you don't just like jot it down on a piece of paper or run and get on a flight to meet the customer. You qualify them, you put them in a CRM, you get some, you really do the work to move them through the funnel. Once you've had a meeting with them, you further qualify them, you move them through the funnel, you organize it on your spreadsheet. And so I started thinking about fundraising as a sales process. And so with that mindset, you can really just be more targeted and more efficient, right? And so I think as founders, when some shiny name comes our way because we know someone that can connect us, or someone reaches out from Andreessen Horowitz, we like run and say, oh, we need to have that meeting. But if you're a pre-seed company, Andreessen Horowitz is not, they just don't invest that early. And so, you're kind of wasting that bullet that you might have later. And so that's what I mean about pitching the wrong deal to the wrong investor. It's like you're actually not ready for that investor. So instead of pitching them and kind of wasting your time, their time, and then also just making it harder to go back when you're ready, like just be intellectually honest with yourself. Like, I'm actually not ready for that investor yet. I will get there when I have the momentum, the traction, and I'm raising a larger round. So let me do that then. And so I think that, as founders, we have to just like really be disciplined and not follow shiny objects, right? And that's true, whether it's on our business processes, our partnership, but it's also true in fundraising. So it's something that I spend a lot of time coaching founders on. And I know it's hard because most founders want to be building product and selling product. They don't want to be raising capital. But the thing is, you will always be raising if you're going to, create a high growth company. And so you've got to just get good at it, and you've got to just get efficient at it, so it doesn't, take up your whole life.
And when you're, what time do you think you should really be looking at Series A funding? What are the sort of the matrices that in your mind you look at when you advise these companies to go out for Series A funding?
Yeah. So I'll speak from a more US perspective. In the US, there's now like several rounds before Series A. So you've got the kind of pre-seed, and say in a place like New York, that can go, anywhere from zero, from a few hundred K to maybe like 1.2 or 1.3. Then you have the seed stage, which like now the seeds have gotten quite big. And so, call that, $1 million to $4 million. 5 million. And then you have the Series A's, which are now, upwards 5 to 15 million kind of on average. And so for Series A, you're just going to need some, some serious metrics, and that bar keeps on going up. So if you're a SaaS company, and you're not doing 150K monthly recurring, you're probably not ready for a Series A investor, right? So every business model has metrics. Those metrics and those goalposts are always changing. So you kind of have to stay up to date of like what those metrics really are. But the most important takeaway is just that the round sizes are getting bigger. In certain geos, their terminology is different. So what you guys might call a Series A might be our seed. And so kind of just knowing the language, the lingo, and kind of the cultural relevance in each geography is gonna help you if you're raising internationally.
One of the other key things is, and this is an issue sometimes in South Asia, is that a lot of the founders are still not sharing the full idea. They're very closed up to mentors and coaches. And I, as an individual, and Hatch as an organization, we believe in mentors for startup, and we believe that's probably the number one thing. And I know that you believe in that as well. How important, you talk about 200 mentors in New York, but how important are mentors and advisors to startups?
I mean, I do the work that I do because I didn't have mentors when I was running my company. I went it alone. I don't even think that term mentor was really around with in 2007 when I started my company, being associated with a startup. And so I just didn't have that support. And over the years, I became a mentor, and I realized that like my kind of knowledge that I could pass on to founders to help them not make those mistakes was actually pretty valuable. And I started getting feedback like, oh my God, Jenny, that was great. And that saved us a lot of time. And we thought about something differently. And so I think, mentors can just, unlock a huge amount of value. And having the right people surrounding you. But again, it's for like, what I think is that you need to have lots of people giving you feedback, and then synthesize that feedback, try to see patterns, try to hear things that maybe you weren't open to, and then run your business how you want to run your business, right? And so the idea of a mentor is not to tell you what to do. The idea of a mentor is to be Socratic, give you the real feedback, and then for you to take snippets and patterns and trends that you're seeing and hearing and help you move on to the next level and be stronger and, and more kind of educated to the opportunities. So yeah, so I think it's great. In terms of like not being open to mentors, yeah, in especially in the US, I think we have a culture of being maybe more open and more sharing. And I don't think ideas are really worth that much. There's, hundreds of companies that pitch me the same ideas and the same things every year. And there's only a few that actually execute and move forward. So execution is really what's going to differentiate you at the early stage. Very rarely will it be IP. So I don't know, everyone feels a little differently about that, but I would say, if you surround yourself with the right people, that's going to be a net enabler way more than anything you have to worry about. I will say, if you're pitching an investor, we don't sign NDAs. We don't, we need you to be forthcoming, and you need to trust us because that's our reputation, right? If I get the reputation of someone that takes ideas and sends decks to other people or does something that is not morally sound, I'm not going to have a job for a long time. And so, venture is really based on relationships and reputation. So, I think it kind of is self-selecting that way.
And on the reverse, how do you onboard mentors? Is there an onboarding program you run through at TechStars?
Yeah, so at TechStars New York, we're lucky to have a lot of mentors. We're in a more evolved ecosystem, but I do remember when we were building it. And so we have mentors that have been around for years and years, mentoring, generations of TechStars founders. But every year we like to, bring in some fresh blood, some new ideas. And so We do bring on new mentors every year, and it's mostly through referrals. You can kind of apply online as well with some information. I will say that at TechStars New York, we're really, the mentors are all founders and operators. So people that have built businesses is really what we're looking for. People that have been in the trenches, whether they founded a company or they built out a business unit. That's actually what we're looking for. And those are the people that we feel like can be most valuable to our founders. So once we decide to spend some time with a new mentor, we actually just try to get to know them, right? We try to get to understand, are they open to, working with people, and are they open to different, types of companies, types of people? Are they very direct? Are they, do they say things with, kind of compassion and empathy, or are they like yelling at startups? So it's like we try to kind of get to know them a little bit and try to find mentors that we feel, have the right mentality. And something at TechStars that we really believe in is this concept of give first. So we want all mentors that are, doing this because they want to help and kind of give back to the next generation of entrepreneurs, not that they expect anything in return, right? And so that mentality is super important, and it's something that we look for and kind of kick the tires on heavily.
And that's great, because I think that's the sort of ecosystem that's being built out here, and especially because this region, there's a lot of diaspora living overseas, so they're giving back. We know there's a time difference, but they're still giving back their time to build entrepreneurs in South Asia as well. So a couple of questions have come up, and one of them is, what are some of the challenges you've faced as a woman entrepreneur in tech, and how did you overcome these?
Yeah, I mean, when I started my company in 2007, there was like hardly any women running companies. There was hardly any women running actual technology companies, or there was some tech. And so, I didn't look like everyone else that was running a company or pitching a company. And I think, I'd been in banking. It was kind of the same thing. And so I think I just, developed a pretty, hard, like tough skin to it, and an attitude of like, I don't really care. I'm just gonna, make this a success and kind of get the last laugh. But on a more like practical level, I tried to use it as my advantage, in that I got to, everyone kind of knew me because I was like the crazy woman running the mobile technology company. And so I used that as an advantage, right? And so I got meetings with every VC I wanted to meet because they were curious who this woman was, right? So I think instead of, just thinking about how hard it is and looking at the terrible statistics about how only 2% of venture capital is going into female founders, like, use it as your advantage if you're doing something, doing something unique and different. And yeah, try to kind of not psych yourself up.
There's another question from Ikram. You've invested in 130 companies. How do you monitor those investments?
That is the question. Well, I've gotten about 16 WhatsApps since we've been on this call. So, you got to stay very organized and very connected. But, the truth is that I feel like my job is to really get them from pre-seed and seed to their Series A. If I can do that, I kind of move my role from, investor and mentor into something I call like, super fan and friend. And so I've seen these relationships really evolve. So the company that you referenced, a company called Latch, that went public. So they were in my first TechStars program. I actually was the person that introduced them to their seed investor and to their Series A. Spent a lot of time with the founders, whiteboarding, thinking about product, early days. And when they raised their Series A, I thought, all right, there's other, someone else is taking a board seat. These guys are really on their journey, and I can kind of really take more of a on the sides, rooting for you type of attitude. And the founders and I have stayed really close. I was lucky to be invited to the bell ringing ceremony at the NASDAQ. And so now I'm like cheering from the sidelines and anything that I can do to help. From a practical point of view, the things that founders, as they move through their rounds, still kind of have me as the first call is a few things. One is like founder dynamics, right? Because it's hard having partners and those relationships change. And I tend to be the first call, even when they're raising their Series C or C, when like there's founder challenges. So that's something I tend to get a lot of calls on. And then fundraising. So, I'm always trying to help on the fundraising side as they're kind of moving through their fundraising rounds. And then I guess the last thing is hiring. So I have a company that, has raised a large amount. Their last valuation was, I think, $2 billion. And I've just sent them 4 really good top C-suite candidates because these are people, I think this company is fantastic and I want people in my network to be working at this company. So those are kind of the 3 things that, once they're really on their way, that I feel like I'm still involved with. And so as you can imagine, those aren't daily fires. I'm not getting the call of like, the website is down. Like those aren't things that I'm involved in. They're kind of maybe more higher level things down the road.
Another question is coming. Due to the pandemic, have you seen different types of startups coming into the program? And is there more focus on a particular area now on the consumer side as well?
That's a great question. So again, every program is different with their theme or thesis, and every managing director has different types of companies that they like to invest in. For me, there's a few areas that I'm pretty deep in. One is healthcare. And obviously, I've been a long investor in alternative healthcare, in telemedicine for many years. So the pandemic was an interesting, tailwind for these companies who did quite well. So that's an area I've invested in pretty heavily. And I think this last year made us all realize that we need to get more involved in health tech. The second one is around fintech, everything from crypto to payments. I ran our fintech accelerator for many years. And I just think the ability to seamlessly transact, which is actually easier in places like where you guys are than in the US, because all of our terrible legacy systems and the like just needs a lot of innovation. So that's an area that I'm always invested in and very interested. And then the last is around the future of work. How are we going to work? And, how is that going to look in the future? And I've been investing in that space, whether it's around automation or it's around new ways to kind of physically interact, or whether it's developer tools that help you be more efficient. So that's something for the last few years I've been investing in. And obviously the pandemic also was, had some good tailwinds as everyone had to go remote. So those are kind of areas that I focus on. And then, I do a little bit of consumer, because who doesn't love consumer? And yeah, just like I've invested in some really great ones that I'm super excited about. A company that's direct to consumer plants in the US, which obviously this last year people started filling their homes with plants, so they did really well. And eyeglasses for kids. So yeah, I don't do a ton of consumer, but when I see something that feels differentiated in the market and applicable to like how we're living and working now, I do get excited by it.
One final question before we go into the fund. There's a rise of studio models, and what's your view of studio models versus accelerators? And can they live in the same ecosystem, or are they completely separate in your mind?
I think the studio model is an evolution of the accelerator and some of these other models in a way, right? It's like, hey, can we find interesting entrepreneurs? Can we help resource them? And can we help them launch faster, quicker, and more efficient? So I think the studio model is really awesome. I think, the cap table is the thing that it can be hard, is like, how are all these people that are adding value, how are they all going to fit on this small cap table? So I'm a big believer in the thesis, which again is really around surrounding founders with resources. But the mechanics of that are kind of different in every studio. And so you just have to, if you're going to be part of a studio, for any entrepreneur that's thinking about it, you just got to make sure that you're going to end up with significant amount of equity, and then there's enough to bring in outside investors and the like. So yeah, in theory, I love the studio model. I love co-creating, and I think it's a great model. In practicality, you just got to make sure that there's enough to go around.
As if you don't have enough to do, you went and started a fund and you're the GP of a fund. Why did you create that? And what was the gap you were trying to address?
Yeah. Well, interestingly, in New York, even though second largest tech ecosystem, everyone talks about how much capital is here. One of the things that we started to see a few years ago is that the people that had small funds, 10, 20, $50 million funds that were writing those early checks, were now raising $200 million funds. And so the checks that they were writing were just much bigger. And so the average seed round in New York has gone from, call it, 750 a few years ago to more than $3 million now. And so the capital is just kind of getting sucked upstream in this way, but it was leaving a gap at the early stage. And so I looked around. I also looked at, our angel groups in New York, and something I found was that they weren't stocked with founders. Most of the angel groups were real estate people or people that made money on Wall Street, who are amazing people, but they didn't have the in the trenches building companies like, people like me did. So I got together with some of my founder friends, and I just, I said, like, are you guys seeing this as well? Like, are you seeing like all these, like, it's so much harder for these early stage companies? And they said, oh my gosh, yes. Like, I'm mentoring these companies, and it's like hard for them to raise capital. So we decided we would just do kind of a fun experiment. We'd all pool our capital into a fund. We'd create an investment committee who would make all the decisions, but we'd operate like a community. So we'd do events every month, and we would really kind of support the companies in the network in a way that it would be hard for a fund to do with that many companies. So it was a total experiment. We just thought, yeah, we'll run it and we'll see how it goes. And it really, like, it got some legs. It started to take off. So our first fund, we invested in 50 companies. And we started getting pings from people around the world, literally everywhere, saying, oh my gosh, we read about the fund. We think that model would be so great here. Can we launch one of these here? And we kind of looked at each other and we're like, I don't know. So what we started to do was think about like the stack that we built, meaning, the back office, all of our tools that our tools, our CRM, and could we stitch something together that other communities could use and benefit from? And so last year in the middle, early summer, we launched in a number of geographies. And so now we run these kind of regional investment committees. All the capital is sourced regionally from founders and operators in those locations. And those funds are being deployed just into companies in those regions. So we have, New York, now we have one in Los Angeles, we have one kind of in the Midwest looking at some of those companies. And so we're having a lot of fun getting, pulled into communities that we feel like there's a need.
And the idea of focusing local entrepreneurs to local companies, has that helped through as well in sort of helping entrepreneurs scale their companies, or how is that helping from the investors?
Yeah, so the people that are giving us money are all founders and operators, and they have a vested interest in seeing people in their community that are kind of a generation behind, so to speak, succeed. And so, this is a great way for them to be able to be involved in the development of their ecosystem, which is something that I think everyone everywhere wants to see. They want to see their ecosystem get bigger. They want to see more capital, more great companies being created locally. So I think our limited partners, who are the people that give us money into the fund, who are the founders and operators, want to be supporting the next generation of entrepreneurs.
And what are the average check sizes in the fund that you do?
Yeah, so small checks, 50 to 100K into that first round. And so it might just be, people that have an idea, and it might be something that is already in market, but maybe hasn't taken in much capital because they've been bootstrapping. But really, our check is small, but our community is pretty powerful, and that's what we bring to it, is this kind of depth of knowledge, of reach, and of people that are just kind of on your side and want to help.
And is it pooled capital, or is it individually investing into companies?
It's a fund, so it's just the fund. It's just a regular fund, like you're running, except our capital just comes from other founders, and so the checks are mostly a little bit smaller, but it's a regular fund. We have a great process. We have 4 local people on the investment committee. We get back to founders within 24 hours. And so we've kind of streamlined it. We're all founders, and so we wanted to create the fund that we would have loved to pitch, right? Like, go pitch, get to know them, get a quick response, and kind of move on.
And you just opened up in Australia.
Yes, we did. So that was a little unexpected, meaning, wasn't, I guess, on my immediate roadmap. But as I said, we really go where the pull is, taking a page of, product market fit. So we're really like, okay, like we've got to go where the appetite is. And Australia is an interesting ecosystem, incredible companies being built there, but investors tend to be more conservative. And so the metrics that they require to put capital into early stage rounds are actually quite significant. And so you just have founders that need to bootstrap a lot longer. We saw like a real gap at that early stage. So we started getting calls from local people saying, you got to make this happen. And again, I was like, oh gosh, Australia. But it's been incredible. We've got some wonderful people on the investment committee, head of product from Canva, and a bunch of others that are all there at like later stage companies that want to now see that next generation start to come up faster. And so very excited about Australia, see a massive gap there.
So the question here from Bangladesh, the question is, in your 130 companies you've invested in, how important is it for them to cross-sell to each other? Do you help them do that? Or do you just let them be looking for their own customers, or do you actually push some of these startups to work with each other?
Yeah, I mean, I think that is like the beauty of being part of networks, whether it's the fund or TechStars or YC or whatever networks that you are a part of. Being able to dog food with other founders and sell into each other, I think is incredible advantage. And so the way that we work at the fund is more organically, in that we run a Slack channel. People are posting things all the time, and if it's another kind of company in the fund family, you're going to be more likely to lean in. And we've seen some of our later stage founders who've given us money. People have founded companies like Casper, the Matrix company, working with some of our startups that we've invested in. So we are seeing kind of that virtuous cycle, which is exciting. Again, I wouldn't say that we push it. I would say that it's organic, because all of the people that are part of the fund have like put money into it. So of course they want to see their investments do well. And so you're really pitching your product to your investor, if that makes sense.
A question from Shaista from Pakistan. The question is, there aren't many female investors in South Asia. A lot of them are males, so it's like almost like a 90-10 variance. Did you ever go through that in the US? And what advice could you give to the women who are listening in terms of investing into other founders?
Yeah, so when we started the fund, something that was to go back. So I started investing through TechStars. It was amazing how other programs, had a lot of male founders, and I had a lot of female founders. And the male MDs would say, well, where do you find them? I'd say, well, I don't know, they find me, right? And so I think we all know that if you have female decision makers, you're naturally going to attract more female entrepreneurs. And so I took that kind of framework to the fund and saying, we don't have a diversity lens. We're not, nothing in our, in our mandate is around diversity, but our investment committee will always have 2 men and always have 2 women. So 4 people, and it will always be that way. And with that, we had a hypothesis that we probably didn't need a diversity mandate, and that we would have a more diverse portfolio. So now that we're 3 years in, we actually have data to look at. And so our fund 1 40% of our capital went into female founders, just by nature of the fact that we have 2 women on the investment committee. And so they're just seeing incredible deals being built by women. So, our thesis is that we need more women decision makers. So, in the US, less than 10% of VCs, I believe, are women, decision makers are women at venture funds. So this is a problem around the world, and we just need to push to make sure that more decision makers in every ecosystem are women. And then, so how do you do that? I think you've got to develop a track record. And so, you can start writing very small checks into startups. You can start running syndicates. You can become advisors, but getting on the cap table of companies that are doing well is I believe the kind of golden ticket to having more women decision makers, right? Because now I have a company that's gone public, so you could say that you actually have a track record now, and so I think it's really important for women especially to just get in the game.
Probably the final question before we start wrapping up. What's the one startup that makes you made the most impact on you, and what's the one startup that has been the most successful in your time at TechStars or the fund?
Yeah, I'll talk about a company I mentioned in my fintech program called Chainalysis. They're a blockchain data and analytics company, and it was an interesting company. They were based in Europe, and they wanted to scale into the US, and I kind of convinced them to come through my accelerator, and that we would help them work with one of the large banks, and that this would be a great kind of landing zone for them to go through the TechStars program. And what I loved about the founders is that they really, as I said, had this unique insight on the market. The CEO had worked at one of the very early crypto exchanges, and he really saw that where the market was going and what was lacking in kind of the picks and shovels around the crypto space. So that company crushed it during my program. They did so well. They were getting partnerships. They were signing with banks, and really, I was super excited about this company. And why it's so meaningful was that I couldn't get them funded. So they came out of the program, and it was so hard to get them funded. Everyone took meetings, everyone loved the founders, but the thing that held them back was market size. People thought, I don't know, crypto, sure, you're going to sell into some governments, some banks. How big could that market possibly be? And so it was just hard. It was hard to get them funded. And there I was on the sideline saying, this is a great company. They're crushing it. These founders are amazing. I've worked with them for months. You got to trust me that this is going to be big. And it was very hard. And so they got their seed round finally together. It took longer, than we thought. And then, their Series A ended up being led by Benchmark. Excel came in, all the kind of who's who. And so it was a very, validating moment for me. But, also in those moments, you pound the table, you tell, everyone that that this is an incredible company, and people just don't believe you. So I'd say that was a very meaningful experience for me, that, your job is to convince people of the impossible, right? If you're building in a new market, how do you talk about market size? Because we don't know. These are new markets. And so those companies, I think, can be, and now that company is, $2 billion valuation, and they have hundreds of people, and they're kind of, the darling of the space. But it wasn't always like that. And so it's always a good memory, it's always a good reminder that, there's hard times for every startup. So that's my answer.
So Brinda, my co-founder of Hatch, has sent me a question now. We're just about to launch a gender-based fund called Her Capital in Sri Lanka for early stage investments. And we run a incubator called Kick-Ass Bootcamp. So one of the questions she's asked is, what's one of the common concerns we discuss with female entrepreneurs is finding their voice and making yourself heard. How do you, what advice could you give to them? They're all listening in today.
I mean, it's hard for me. I was an only child of a very outspoken family and father, and so I was always just, kind of out there, not thinking about whether I was a woman or a man. And I think you've just gotta, get your confidence up, and not everyone's gonna love you. And I think, as women, we want to like please people. We want people to like us. That's not your job. Your job is to build a massive company. And you just got to remember what your true north is, and just not worry. And also you just got to get thick skin. Like you just can't, who cares what people think? And, I get called many names behind my back and I just move forward, right? I know that I'm doing my life's work. I know that I'm doing good work, and I know that I'm helping people, and that's what drives me.
Well, Jenny, thank you very much. It's been very insightful. It's amazing to talk to someone who's globally aware of what's going on in the entrepreneurial world, an investor, an entrepreneur, a mentor, as well as a venture capitalist. So having everything in one person is amazing for people to listen in South Asia. So thank you very much from Hatch, BYLC Ventures, Seed Ventures, Pro Pakistani, and Hatch Pakistan as well. So we really appreciate you taking time, and we'd love to have you in the region. There's so many more questions that have come our way and we couldn't take up today, but we'd love to have you and host you in South Asia as our guest. And we look forward to seeing you soon. And please do listen into other Hatch programs that we're going to be having. We're having next week, Gihan Amrasiriwardana, who is the founder of Ministry of Supply in the US. He's going to talk to South Asian retail world and how risk is important in taking on retail. So, Jenny, thank you very much. If you got any last words, please do share them.
Well, just want to thank you. It's incredible. Building companies and evolving ecosystems is actually a very, inspiring for me. So I'm really excited with what everyone is doing, and just hearing everything about the region. And watch this space, because the fund is looking very carefully at communities there. So you'll be hearing about us soon.
Thanks very much, Jenny, and lovely seeing you again.
So good. Thank you.
Thank you.